Let's bring in Jackson Ader, Managing Director for Software Equity Research at SVB MoffettNathanson. Sorry about that, Jackson. I get that one out. That's a long one.
It's a mouthful. Don't worry about it.
It's a mouthful. All right. Thank you for being here. I want to start with that Monday.com. One of the favorite stocks of our own, Jim Cramer. Give us a sense of the earnings beat and if it's a meaningful sign for this entire sector.
Sure. So it was a meaningful beat. If you think about the top line, they beat revenue by about 6%, grew over 50%, whereas consensus was expecting something closer to 40. And the real big beat, though, was on profitability. Most people were expecting a loss of, call it, 20 million, and they didn't come in anywhere near that. They came in at a $14 million profit. The most exciting part, though, I think for the stock was guidance for next year. Not only the number, but revenue growth for 2023 was much better than what people were expecting. And then the path to profitability, much clearer now is what I would say as we kind of look out to 2023 and beyond. So certainly a meaningful beat, not only for the stock, but it can say some things about the sector.
I want to talk to you about one other metric, but I do want to talk to you about some other stocks. So when we look at a stock like Monday.com, as recently as last year, it was the rule of 40. That's how everybody was judging software stocks like this, and people can't see it, but you're smiling right now. Is this company meeting the rule of 40, and is that still meaningful in today's environment?
Okay, the rule of 40, to answer your question simply, no, it is no longer meeting the rule of 40 on a go-forward basis. They did in this most recent quarter. But again, just to remind people, okay, what is the rule of 40? The rule of 40 is if you add a company's revenue growth and their, we prefer free cash flow margin. Some people choose maybe non-GAAP operating margin. But if you add those two metrics together and it's above 40%, great, you're a rule of 40 company. It's a crude and arbitrary metric, but if you do some back testing, it does have some significance in terms of software returns.
You don't sound like you believe in it.
Right. Now, okay, so Monday no longer, or I guess what we should say is Monday's guidance for 2023 no longer implies that it is a rule of 40 company. Does that matter? Less today than it did. I think one thing that we learned in 2022 is these fun metrics, and whether they're SaaS metrics or otherwise, are they kind of pale in comparison to some of the sectoral trends or even sensitivity to interest rates? So no, they're no longer rule of 40. Doesn't mean that I wouldn't own that stock today.
All right, I got you. So we're just coming off the Super Bowl yesterday. A lot of people call the NFL a copycat league. I think stocks are kind of a copycat league themselves. People see a stock like Monday.com. I'm looking at the chart right now, up about almost 20% year to date. Are there any other competitors to Monday.com that you think maybe trade at a lower price but are just as attractive?
Sure. If you think about some competitors, we actually, on a like-for-like basis, we actually like Monday.com the best in this work management collaboration space. And the one that we really prefer it over at the moment is Asana, for a few reasons. So we should probably zoom out a little bit. If you think about what we would expect in software in 2023, if 2023 turns out to be a year that IT budgets are constrained, we would prefer to be in what we would consider infrastructure software instead of applications. So we would think that demand would be more durable for security or monitoring or DevOps rather than applications where Monday and Asana play. We also would expect that maybe a usage-based or a data-driven revenue model would be better than a seat-based model because Monday.com and Asana sell to technology companies on a seat-based revenue model, and people are getting laid off. We would also prefer software companies that are more exposed to the enterprise and not small and medium-sized business.
Got it.
And that's not what Monday.com serves. So all of these trends are kind of setting up against Monday and Asana, and yet we were able to see Monday today buck those trends and put up a great quarter. But we think that Asana is probably going to get caught in some of those trends because they're in retrenchment mode, whereas Monday remains in investment mode.
Jackson, we got to leave the conversation there. Jackson Ader, excuse me, I'm going to mess this up. Jackson Ader from SVB MoffettNathanson. I was practicing it in my head, Jackson. Great insight. Great to have you here.